Hey everyone, welcome back to the Bull Run Bunker. I'm your host, Jordan Finiseth, and today is Tuesday, January 27th. If you're new to the Bull Run Bunker, this is where we unpack game-changing strategies in the investment space. Today, we're switching gears a little bit from last week and we're going to investigate a powerhouse topic, the pristine collateral strategy, with Bitcoin, Ethereum, and gold forming the backbone of the new financial system. We'll explore how to accumulate during those boring phases and spotlight some assets and other cryptos that you can buy for indirect exposure to these assets. So let's dive in. So there's a presentation I made. Again, Bull Run Bunker, the pristine collateral strategy, focuses on Bitcoin, Ethereum, and gold as the backbone for the new financial system. Before we get jumping into that topic, let's take a quick look at the markets. The total crypto market cap is hovering around $3 trillion, consolidating after the recent pullback. While those that were hoping for new highs in the new year are disappointed, this setting is actually ideal for our upcoming topic on accumulating pristine collateral assets. But before we jump into the topic, let me just look at the crypto market real quick to see if there's anything else going on, kind of look at the tokens, look at what might be worth looking into right now. Let's see, we got, Hyperliquid. Hyperliquid's up 23% today. Hyperliquid, if you don't know, it's like a perp dex released last year. You can go and trade. It's more for trading. It's not for any specific niche of the crypto sector. It's more specifically focused on trading. But yeah, we're getting green across the board, and we're actually starting to see green on the 7-day chart now, which is good. And Hyperliquid's off almost 40% on the 7-day chart. Zcash is still performing strongly. That means all the privacy coins are probably doing well too. Let's see, where's Monero? Well, Monero is not compared to Zcash. I need to look into this one, Canton. This has been performing really well over the last several spikes, actually, for several months. It's always one of the top performers. So that's actually it's on my list to look into. I just haven't gotten around to it. Yeah, we got a lot of green on the day. Is it going to continue? Well, who knows? Might be a nice little bounce. Another one similar to, well, that's so interesting. So Aster, which is similar to Hyperliquid, is also up 14% on the 7-day chart, more than most of the tokens, and almost 5% today. So that's something that we should look into, or maybe a good topic for one of these upcoming shows, these perp dexes. And what I'm really noticing with this cycle actually is that, like last time, it was meme coins and all these other degen type categories. But this time, ever since 2024, when Bitcoin ETFs launched, we're seeing a lot of tokens and platforms that serve TradFi like mainstays, things that used to exist or still exist in TradFi that are bridging over into the crypto ecosystem. I'm noticing those types of tokens are actually starting to really pump. Like Hyperliquid, Aster, some other ones out there that are really kind of filling the need between DeFi and TradFi. So that's something to keep an eye out for, just kind of a look up on the current state of the market. Let's see what else we got. Pump Fund. If you like your meme coins again, Pump Fund. If people don't know, we did do a crypto mastermind session on Pump Fund. It's a platform where people can go in and pretty much just launch any kind of token. Within seconds or minutes, you can launch a token and get it out there. That's why the number of tokens that are out there has increased from the thousands, tens of thousands, to the millions, because of sites like Pump Fund that allow people to just rapidly issue new tokens. Let's see, we got Quant. That's a good one to look into long term. I personally don't hold that one, but it is a solid project. Lighter, that's another one. So Lighter, Hyperliquid, and Aster are all very similar. Lighter is more for it's a pristine, not pristine collateral. It's credit, for credit and lending. So yeah, again, all these TradFi mainstays are kind of migrating into Pippin. I'm not sure what that is. Yeah, all these TradFi mainstays are migrating into the DeFi space, making way for the big boys to come in and really start engaging with the ecosystem. Then we have to look into what Pimpin is, because that's up 40, almost 50% on the day. Anything else? AB is down 8.9%. Down just, that's in the Tron ecosystem. Just so we're looking at the gainers and losers. Plasma is a Tether. I think I mentioned this in the last one. It's Tether's own personal chain that they launched for stablecoin payments. It is, I think that's one of the up and coming sectors. Stablecoins are a popular sector within the cryptocurrency ecosystem. So I think this is an interesting play. Again, I mentioned it before. Our crypto mastermind session, we were pretty hyped on Plasma. The remote viewers looked at it. They weren't so hyped on it. They kind of saw some struggles, but we'll see how that goes out over time. I know Tether, which is the one that released plasma, they got ample funds in the treasury, including quite a bit of gold. We're going to get onto that in a little second, gold and whatnot. But yeah, I remember when I first got into crypto in the 2018, 2017, and all up to maybe even 2020, it was always like Tether's going to go down, USDT is going to go bankrupt, all these types of things that cause all kinds of FUD. And here they are, one of the like stalwarts and like cornerstones of the whole ecosystem now, making it so that exchanges and liquidity can really flow. So it's interesting to see that whole thing kind of transform over the years. But it shows the power of stable coins and even just having a one, like the $1 US. So we'll see how that whole system gets affected as we move forward and we see challenges to the dollar. We're seeing there's different developments on the global stage. So we'll see how long the dollar holds its currency status. And even though it's the prettiest pig of the bunch, it's still a fiat currency and it's eventually going to go away. Monad, that was a token that got launched on Coinbase several months ago. It's doing pretty well. Again, I think I'm looking at that one too. I looked in it briefly, but I can't remember what it was off the top of my head. 1inch is down 14%. 1inch is a decentralized exchange similar to Uniswap. Let's see, Oasis, Rose, it's another layer one. Pretty complicated to use. I haven't used it in several years. I wonder if it's gotten any better. And a cash network, that's a DPIN for, I think it's for loaning out your CPU maybe, or hashing power. So that's a quick look at the market. CoinMarketCap, I always use this page because I don't think it's easy to get to, but I like it because it shows more tokens than this page. But this page is good. It shows some of the more like trending topics. These can help you find tokens that are up and coming, rising right now. Bitcoin, Hyperliquid pump fund. So some of those ones I mentioned are on this list. Prediction markets, that's a big one. Maybe we'll do a solo show on that in the future. Prediction markets are becoming real good. Now we got Robinhood launched a prediction market. Yeah, Polymarket here that we see on CoinMarketCap. This I think one of our remote viewers, Daz, actually mentioned, he's like, we should try, because there's a type of remote viewing called ARV, where it's basically like picking between one or two things. Like if you're doing the remote viewing session and you see a wheel, it's picture A. If you see an owl, it's or outcome B, outcome A and outcome B. So your remote view, if the remote viewers all see wheels, they know that outcome A is the one to bet on. We might have to test out to see if we can apply that to the prediction markets here, because it is kind of A, B most of the times, just two different choices. New gain, and there's the gainers that we just kind of covered. I wonder if it's going to, see, it's going to cover a lot of the lower meme coins further down the list, not some of the tokens that we saw here. Pepe, yeah, a lot of meme coins. But anyways, that's just kind of something to look at with CoinMarketCap. I'm trying to see. No, there's nothing for our pristine collateral topic today, but that's okay. So let's get back onto that topic. Let me see if I can find that. Our crypto share something else. Get back to this presentation. Share. So that's the market pulse currently. And gold is over 5,100. It's up, I think it's about 5,170 the last time I checked. New all-time highs yesterday. The first time it's ever been in this chart, this part of the chart, so it's uncharted territory. I'm really excited to see how that goes. Finally, gold's catching up. So we'll see if that continues, but it's a big part of our pristine collateral. So the key narrative of the pristine collateral trade is boring sideways action is the foundation for the next up. Slide 3. So let's get into this. What is pristine collateral? But I want to get in that. There's some news. Actually, let me share a little bit of news on the news front. We had tokenization continues to kind of be a buzz. BlackRock's latest report echoes what we've been saying here at Bull and Bunker and what we're talking about today. And it called Bitcoin specifically and Ethereum as well pristine collateral for the digital economy. With ETH, and highlighting that ETH powers over 65% of the tokenized assets, will be covered last week in the tokenization discussion. So we know that ETH is a major player in that whole sector, followed by Solana. Michael Saylor's strategy, formerly MicroStrategy, has announced more BTC acquisitions, reinforcing BTC as an unencumbered collateral in corporate treasuries. And at Davos, the wrap-ups, leaders highlighted gold MBT as hedges in a fragmenting global system. There were no major shakeups, but this quiet phase is screaming opportunity for those strategic to accumulation. So that leads us into the topic for today, the pristine collateral strategy. In a world of rehypothecated assets, counterparty risk. Pristine collateral means high quality, unencumbered holdings that can't be diluted or seized. Think assets with no liens, infinite durability, and global liquidity. So again, yeah, high quality, unencumbered assets, no counterparty. The durability, liquidity, sovereignty. As I mentioned, BlackRock specific called Bitcoin and Ethereum, pristine collateral for the digital economy. But what exactly is the pristine collateral strategy? Let me break it down for you. The pristine collateral strategy positions Bitcoin, Ethereum, and gold as the foundational pillars of a resilient new financial system. These aren't just stores of value. They're the ultimate collateral for lending, DeFi, and even traditional finance in a tokenized world. Remember, tokenization is one, I talked about that last week to really kind of lead into everything else because tokenization is going to be the theme over the next decade. For Bitcoin, it's often called digital gold. BTC is a bearer asset perfection. There's no counterparty risk. There's a capped supply at 21 million, and it's increasingly used in BTC Fi or Bitcoin Fi, Bitcoin Fee, for collateralized lending without selling your stack. So it offers people a way to get extra money, use that money for investments without having to sell their Bitcoin. Bitcoin's a hedge against inflation and systemic failures, with institutions like Strategy borrowing against it to fund their growth. And you're going to see this more in the future of companies getting Bitcoin and using that to get loans and fund their growth. As for Ethereum, ETH isn't just a token. It's a productive infrastructure. With staking, it's generating yields while serving as collateral for stablecoins, tokenized treasuries, and DeFi protocols. Sources like Obol and Payments call it pristine collateral for the on-chain economy, independent of external risks, empowering trillions of potential value. Now, one thing to note about Ethereum that kind of makes it stand apart from others is that it has the ability to stake it. So it's almost like a dividend. And some places you can stake it to earn up to 4 or 5%, which is kind of, it's for the portfolio, it's adding the money generation, it's bringing in passive income, which is something that everybody looks for. You don't necessarily get that as easily with gold or with Bitcoin, even though there are platforms out there right now, which I will cover later, that allow you to lend your Bitcoin and you can stake it as well. ETH, it kind of is the top out of these three assets. ETH is the best for that part of the passive income. As for gold, gold is the timeless backbone of most people's portfolios historically. It's the OG pristine asset, if you will. Gold offers physical scarcity and historical stability. In the new system that's emerging, it's being tokenized for on-chain use, blending with crypto for 24/7 liquidity and fractional ownership. Together, these three assets form a trifecta: BTC for sovereignty, ETH for utility, and gold for tradition. So now that you have these main, you know a little bit more about the main assets. What is it? How do you accumulate during these boring phases, or why is this a good phase now? These sideways or mildly bearish periods are when prices grind without any fireworks, allowing people to kind of get in without having to worry about a lot of volatility. This boring zone is where the millionaires of the 2028 halving are being made right now. So I promise you, there's people that have played this game, been through multiple cycles, and they know right now is when you start preparing for that next halving, because you're going to see the price and Bitcoin jump dramatically after that, whether it's the most recent time, Bitcoin price actually hit a new all-time high before the halving, which is the first time it ever did in history, largely because of the launch of Bitcoin ETFs, spot Bitcoin ETFs in the US, really drove interest. And they were the best performing ETFs, I think, in history for the US, which tells you just a little bit about the whole ecosystem and the demand for it. And that's only going to continue. Again, the halving, for those that don't know, Bitcoin is a proof of work token. There's miners around the world hashing the Bitcoin algorithm, trying to solve a block. One person gets all the block hashing in the correct order and finds the nonce. It's called the nonce, NONCE, which is kind of like the last little code you put in with all these transactions to make the block work. One person finds that nonce, submits it, and it mints the block for Bitcoin. So all the transactions that happened in the last 10 minutes are stored in that block, and then it goes on to the next block. Why was I saying that? I lost my train of thought. So, our crypto Ooh, I'm just going to go on the next part. Oh, yeah. So the halving. Yeah, the halving is there's a certain number of Bitcoin mined each 10 minutes. Right now, it's like, oh man, I can't even remember off the top of my head. It's going to put me in the box. But so when the halving happens, it basically cuts the amount of Bitcoin being mined in half. That's why it's called the halving. So it goes even lower. At first, it was 50. I think now we're down to 3.125. So after the next halving, it's going to be 1.5 something. So over time, the amount of Bitcoin being minted and put out into the world, the new Bitcoin being put out is decreased. And I think right now it's probably like 94 to 95% of all the Bitcoin that are out there are all the Bitcoin in existence are already mined. So over time, the halving is going to have less an impact, but it's still going to play a role just because it has historically so far, and a lot of people still drive that narrative. So there are people that are investing right now in Bitcoin, preparing for the next halving, and as well as some of these other categories. So when you kind of got the basics of the pristine collateral strategy, here's a couple of approaches. The first one is called the 60-40-0 rule. And they help you kind of build your positions in these assets without having to pay the FOMO premium. So everybody gets excited, the price shoots up, and then you jump in up here and the price comes back down. That's a FOMO premium, FOMO, fear of missing out. Everybody's trying to get it, pops up, the demand kind of wanes, comes back down, then it does it again. It kind of repeats over time. The first one, as I mentioned, the 60-40-0 rule. You keep 60% in the big three, Bitcoin, Ethereum, and gold, 40% in cash and stable coins, and 0% in emotional trades, which includes things like meme coins and whatnot. A lot of people are going to have a problem with this. Maybe the older, more conservative investors, not so much. But if you're a DJ like me, you're like, ooh, give me some of those memes. I mean, I think Dogecoin is one of my best trades ever. So it's just something to keep an eye on. The next one is it deals with the Wyckoff chart pattern. If you don't know the Wyckoff mindset, you look at the charts. When volatility drops and the price goes sideways for weeks, that's not a dead market. It's phase B accumulation. The big players are absorbing supply from bored retail traders. And this is when those folks are really making their money. Just to kind of help you out, let me show you the Wyckoff pattern. So here's the Wyckoff chart, accumulation schematic number 2, Wyckoff events and phases. And then what I just mentioned, it's phase B right here. So you see it's volatile up and down, but largely kind of draw a line through the middle. You'll see that it has a median line. It's trading above and below that line, but not really going to it. So right now they're saying that we're in this phase. Another phase next, you're going to kind of probably have another dip. And then after phase D, once phase D hits, price starts going up. Our crypto consolidates a little bit more and then goes back up. So right now we're in phase B. And that's what the institutions know this. And they're actually looking for these low, they probably have buy orders down here. Bitcoin, this is support level around 84,000. I wouldn't be surprised if quite a few people had a lot of buy orders right in at that price level, just because they're trying to get as much Bitcoin for as little amount of money as possible. And they use Fibonacci retracements, all these things that lots of traders use. So a lot of traders use certain indicators, and you have these bigger asset managers. They'll look at those same indicators, but they look at it from the perspective, they know that there's a bunch of people putting orders in, buy orders, sell orders at certain levels because of that indicator. So they'll either go right below it, right above it, and really just try to play the interest in the indicators. You know, round numbers are always $100,000 Bitcoin is a popular number. If it gets there, we'll probably see a pullback because there's people selling. There's probably sell orders in at 100,000, goes up to 100,000, sell orders hit, drops back down, goes back up. You get the idea. But yeah, right now we're in phase B, accumulation, and the bigger players are absorbing supply from bored retail traders. So let's get back to presentation. So that's the Wyckoff mindset. Some of the other tactics, there's dollar cost averaging, or DCA, which involves making automated buys. Each week or each month, you pick a certain time period and you kind of set it and forget it. If you want to, you set like $100 weekly into BTC or ETH, regardless of the price. And like the one strategy is to put the buys in around Sunday nights because liquidity is thin and you can see some faster market movements, like one person coming to sell. If there's low liquidity, person comes in to try and sell a few Bitcoin, and there's not buy orders at the current price, they'll sell it to the prices below it, which causes the price to drop. It can happen the other direction too, but these happen on Sunday nights, especially when there's low liquidity. So that's one opportunity to try and get in there and get the best price. The idea behind dollar cost averaging is that over time, your price averages out and the volatility kind of gets negated, and this turns boredom into compounding gains. So for the people that don't want to be at their screens all the time, really managing their positions or trying to pick the best price for Bitcoin, you go on Coinbase, if that's your exchange, you put in a recurring buy at this time on this day of the week for this amount, and you just set it and forget it. If you have done that over time, I think that's one of the most profitable Bitcoin strategies ever. Some people have showed that if they just put $100 in every week in Bitcoin ever since 2018, they got a significant amount now, much more than they put in. So that's something to consider. There's also staking and yield farming. For ETH, you can stake on platforms like Lido or Rocket Pool for 4 to 5% APY. For Bitcoin, use Bitcoin BTC-Fi, Bitcoin-Fi protocols to lend without custody loss. Gold, well, you can't really lend anywhere currently. Actually, I was going to check that. I forgot to do that for this presentation. I was going to see if you can lend gold on Aave via one of the tokenized forms of it, whether that's XAUT or Pax Gold. I'll have to look into that, and I'll update you maybe later in this week on that. But overall, you can just hold it physically or get the tokenized versions for long-term price appreciation. So I think I have a slide that kind of just lays this out further. Yeah, it's a ballast and sale method. But overall, you want to buy the dips strategically. Use technical levels, such as, like I mentioned before, Bitcoin support at 84,000 to add during pullbacks. Patience here is the key. Boring phases often precede bull runs. If you want me to show you what that looks like on the Bitcoin chart here, the support I was just mentioning. Let me pull this chart up. Share something else. Our crypto map. So here's a Bitcoin chart, one-day chart. You can see that it waved. This is the Elliott wave absolute. So it waved from this price at $48,000 back in August of 24. 1, 2, 3. The 3 wave on that one was in January of this year. Topped out about 108. 4 down, and the 5 up was back in October when it hit 126,000. And now we're in the corrective phase. Still hasn't kind of given the next leg up, so whether it's kind of determining what this corrective phase is. But I said that there's a support at about 84,000. You can see that here's 84, right about there. These dips down. Let's see if I can get this tool. See that none of these dips really went below 84,000. This one went a little bit, $200. But other than that, they kind of bounced. So I'm saying that there's an $84,000 support line right there. And it's possible that quite a few, because it hasn't even that real big sell-off back in November, dipped down to 80,000, but it popped back up real quick. And it's kind of holding above 84,000. So I wouldn't be surprised if there's a lot of institutions out there actually having buy orders in right around the 84,000, just in case we get another leg down, which a lot of people are predicting. I mentioned before that we're predicting a possible kind of choppiness, weakness through Q1 of 2026. So we still got a couple more months of this weakness. And in my opinion, that's not investment advice, that's just my opinion. So I wouldn't be surprised to see Bitcoin test a little lower before we go higher again. Our crypto map. Let's get back to this presentation. Maybe I'll move away from these presentations in the future. What do you guys think? So, dollar cost averaging. The ballast and sales strategy. And this is getting into ByteTree Bold, which is a combination of Bitcoin and gold. I actually learned about this when I was working at Kitco. Kitco is a precious metal dealer, and ByteTree, and the guy that actually writes the Bold newsletter, he actually wrote to me talking to me about the product and stuff, and I kind of looked at it and was like, oh, this is really interesting. And it makes it's a perfect kind of add-in for what we're doing right now. Oh yeah, but just to go back, these 3 strategies right here, they treat these as stacking seasons. So you do these different things, You want to avoid leverage because leverage is a good way to kind of lose your shirt, lose all your money, and get back to like zero. So you avoid leverage, kind of follow these simple but effective methods to grow your stack, and focus on fundamentals like adoption over metrics and short-term noise. As I mentioned, bold. For those that are looking to get into both gold and Bitcoin seamlessly, you can try bold. It's created by ByteTree. It's the Vinter ByteTree Bold One Index. It's a risk-weighted investment vehicle that dynamically allocates between these two assets based on inverse volatility over the past 360 days. It's a mouthful. They take the volatility, they take the inverse of it, and they re-weight how much of each asset is in the product based on volatility and stuff to try and maximize the gain that you're going to get out of both. So recently, as of January 26, 2026, Bold holds 34.8% in Bitcoin, which is a historical high for the product, while it holds 65.2% of its funds in gold, capitalizing on their low correlation, with Bitcoin thriving in risk-on environments while gold shines in risk-off scenarios. Together, they deliver enhanced diversification and lower overall volatility compared to holding either asset alone. In the context of pristine collateral, Bold acts as a ballast and sail, if you will. Gold provides stable, traditional backing, while Bitcoin adds growth potential, making it ideal for collateralizing loans or DeFi positions with reduced risk. Our crypto map. Oh. Did that stop sharing? Let me make sure. So the monthly rebalancing of Bold adds to an estimate, and overall it makes it so that it's about 5 to 7% annual increase in value through mean reversion, with historical performance showing 185% growth over 5 years and a 20% annualized return. So every year it's going up 20% of what it was at the beginning of that year. Over time, that's a pretty healthy return. Not too many people are going to poo-poo that. So yeah, it's good. The different ways to get it. It's on the Swiss exchange or the London Stock Exchange. Its ticker is BOLD, B-O-L-D. It does have a 0.65% fee to use that. There's also institutional trade, institutional grade trade with physically backed custody being done by JP Morgan and Copper Anchorage. Yeah, basically Bold, it offers both exposure to both and allows you to build a resilient, unencumbered portfolio that keeps up with the evolving financial system. Our crypto map. Beyond direct Bitcoin and ETH buys, here are some alternative cryptos and stocks for indirect exposure to these pristine assets. These are great for diversification or if you have a regulated portfolio where you can't necessarily get into the cryptocurrencies too much. Our crypto map. First is MicroStrategy stock or strategy, MSTR. Many people use this as a proxy for BTC as it holds billion in Bitcoin on its balance sheet, comprised of 712,000 plus Bitcoin. One of the biggest Bitcoin holders on the planet. I think the top is Satoshi Nakamoto. We'll see if that ever gets claimed. But holding MSTR is like owning BTC through a public company with added enterprise upside. Its current price around $160 a share, and analysts see it tracking BTC's growth, potentially doing a 2 to 3x from the current levels if the bull market really extends. Another option are Bitcoin miners such as CleanSpark, Mara, and Riot. These are mining stocks often act as high beta play on Bitcoin. Just like in gold, they always talk about buying the miners as an ancillary play. The same thing goes with Bitcoin. Bitcoin miners, when the market is boring and the price is sideways, miners often trade at a discount, just like you see with the gold. They provide a way to gain exposure to the issuance of the collateral rather than just holding it. So mining is how the Bitcoin is made, and you're getting exposure to that process. And these companies do generate millions of dollars because as the Bitcoin price rises over the years, even though the issuance is lower, the amount that they make kind of keeps up pace or actually increases because of the rising price. Some indirect exposure for gold. You have tokenized gold, which I mentioned earlier, PAXG, and XAUT, which is Tether Gold. PAXG is tokenized gold on Ethereum. 1 PAX equals 1 troy ounce of physical gold. redeemable, and tradable 24/7. It's a seamless way into gold exposure with blockchain perks. Its price closely tracks the spot gold price, and you can expect steady appreciation as tokenization booms with 20 to 30% upside in 2026 if the gold rally continues. That's a big if. We'll see. It's already gotten a little overheated. I don't know if that chart I showed you. As you can see here, we got gold. It's wave 2. Some are saying that it's actually on its 5th wave right now. Some projections say peaking around 54.71. Some already said it peaked. But regardless, the Elliott wave is showing that it is predicting a pullback. How far that pullback will go actually probably depends on how high it goes. So we'll see about that. But as I mentioned, there's the 20 to 30% upside that some are predicting for gold in 2026 if this rally continues. We'll see about that. What is that from there to there? Top of here to there is only 6%. So what is 20% from here? Let's see. So they're predicting a possible over $6,200 price from gold. It's still a little bit upside, you know. Some people that have been in cryptos are like 20%, but 20% is not bad for most assets. Especially, just don't get ruined by crypto, and you'll be all right. So yeah, there's some predicted upside for gold, but how much that is gonna depend on some geopolitical factors and other things, and we'll see. Some our in-house analyst Marty Hibbs actually predicted that there might be a little bounce in the DXY here, but then after that, there's going to be a long extended downtrend for it, which will probably work out good for gold, silver, cryptos, lots of other assets. So keep an eye on that. The other tokenized version to keep an eye on is Tether Gold, XAUT. It's another tokenized gold play backed by reserves and integrated into DeFi. Similar to PaxG, but with Tether's ecosystem. I wouldn't be surprised. No, not surprised. I'm assuming that this will eventually launch on the Plasma chain just because it's for payments and this will allow payments in gold. But again, this one tracks the price of gold. Its price is currently the same as price of gold. And it's positioned for growth in hybrid financial systems. Now, setting aside Bitcoin, Ethereum, and gold, one potential play is Chainlink, which is the infrastructure bridge. Chainlink is known as the Oracle standard, and it is a critical middleware that connects off-chain data like the price of gold or the CPI index to on-chain smart contracts. If Bitcoin and gold are the collateral, Link is the system that tells the bank exactly what the collateral is worth in real time. So I put Chainlink, and we've talked about it in our crypto masterminds, is actually a reserve asset. And that's like what companies or even the government, they talked about making a strategic reserve for cryptos. This is one of the assets that will likely be in that because I think I mentioned the last one too on tokenization. Chainlink is the top oracle in the whole crypto space. It connects, it's probably north of the 65% that I mentioned for how much tokenized assets are on Ethereum. I think Chainlink covers even more higher percentage of the total like Oracle duties within the crypto ecosystem. It's the Bloomberg of crypto, if you will. So that it has a good long-term trajectory and price outlook, in my opinion. So that's one to kind of look at for indirect exposure to the pristine collateral of Bitcoin, gold, and Ethereum. Chainlink is a side play that's purely crypto. But overall, these picks let you tap into the pristine collateral narrative from angles like corporate treasuries, mining, ops, or tokenized commodities, all with direct spot buys if you prefer stocks or alts. Community questions. So I checked our community question list. I didn't really see it. Let me see if I can pull it up. This is a post that I posted on FFG the other day, just announcing that these shows are going to be recorded right now, but more largely because of the internet issue that I had going out. Just want to make sure that I'm going to probably get Starlink so that my internet's secure, sure, I don't kind of lose service while I'm doing these shows. That's never a good thing, right? But let's see, we got great stuff. Hard to keep up and understand it all from Daniel. Any info on committees, like Jordan gets a heads up that someone had taken a huge hedge position on silver, and this is what could happen. I haven't gotten any of those updates. I'm not too in the know on some of those big positions. There are different X accounts, like I know Whale Tracker, specifically for crypto. Whale Tracker tracks big whale movements of cryptocurrencies. I would imagine that there's probably a similar service out there for silver, just who's putting big orders or derivatives orders or whatnot, trying to sell a whole bunch of paper silver to drop the market, stuff like that. I'll have to look into that. Thanks for asking that, Daniel. Any info on what projects in crypto are being adopted in the sector, a category, or others which are crypto fall as a result of that? There's different sectors that are coming out. There are some announcements. Again, Chainlink is one that I've seen announced probably the most frequently as far as being involved in different sectors. If you want to kind of see what is good in the U.S. to invest in, there's World Liberty Financial, which is Trump's family's crypto company that they made. Not so much, I'm not telling you to invest in that necessarily, even though I do think it will probably do well just because the Trump family name is doing well and they're into cryptos. But it's more about the assets that they're putting on their own treasury. They do have Chainlink. They have Ondo, which we covered last week for tokenized assets. There's quite a few other ones. I can't name all of them off the top of my head. But yeah, if you want an idea on good assets to invest in and where to look, just look at the treasury of something like World Liberty Financial. And there's other, you can look at asset managers, venture capital firms. Look at the bigger holdings, not so much as lower speculative ones, because they do put money into ICOs, initial coin offerings, or tokens that have not yet launched that are looking for funding to really build their platform. VCs get involved in that. So that's their lower funding, but you'll see some of them, they continue holding larger positions in other tokens such as Bitcoin, Ethereum, Solana, anything that's really Chainlink, anything that's really established itself and has the promise of growth. And while I'm not including Solana in this discussion on pristine collateral is because there's still questions about it. Solana has had multiple outages in the past. And even though they've had updates and changes, there's no guarantee that that's not going to happen in the future. And you're not going to have asset managers holding potentially billions in dollars worth of value on a chain if it could potentially go down. Ethereum has never gone down. Solana has gone down multiple times. Now, if you have an asset manager and they got $1 billion on Solana and the chain goes down, they can't access that money. That could cause all kinds of problems for their fiduciary responsibility. They have clients that try and make claims and all these kind of things. So there's still questions around Solana. Even some of our remote viewing has showed that there might be some issues in the future. Us at Crypto Masterminds, like we're hot on it short term, but long term, we do have concerns that it could be like a Trojan horse or something. Something is going to go wrong there. Of course, it all remains to be seen, and that's all speculation, but that's just what we see now and how we're feeling about Solana. So that's one of the reasons it's not being included here. And there's not really any companies out there that are specifically called Solana pristine collateral as they have for Bitcoin and Ethereum as well as gold. So that's just a little bit of reasoning behind that. Angela, as volatility increases, what's a sensible number of different cryptocurrencies to hold going into the bull market? I imagine it may be difficult to juggle many at once. Yes, Angela, that is correct. It is hard. I think in 2021, I probably had over 100 cryptos, and I didn't sell a lot of them because it was just, I missed the peaks. It's really hard to keep up. Even if you have a portfolio tracker, you're not necessarily going to see the peak. You're not going to easily be able to log onto an exchange like Coinbase, some of the bigger ones in the US. They often go down when markets really start moving. And there's different reasons for that. Like if the price of Bitcoin drops significantly or it increases significantly, they might not have the assets on the exchange to be able to handle all of the trades and all the demand. So that they kind of shut the order book, shut down the platform just so they can get back into operating stance. And there's lots of more conspiracy ideas on why that is the case. But when you have hundreds of tokens, you have to factor in the cost to transact because there's always a transaction fee to send it or receive, or well, to send it, not so much to receive it. If you have too many, they'll really decrease the amount of funds you have. And it can be hard to, like I said, to track them all, to get them onto the exchanges, to catch it when it's pumping while it's doing it. That's why, like at Crypto Masterminds, we regularly reinforce the idea of setting your take profit levels. So when you first start looking at asset, before you buy it, you get the background on it. you want to determine what price you're willing to pay. So if it's at this price, but you want to try and get it here lower, you're looking at the chart, you're seeing that it might go down. You put your buy-ins down there. And this also, like, sometimes you do stink bids where just for S&G, shits and giggles, you put a bid in really low because you'll see, like, let me show you. Our crypto. Let's go back to Bitcoin. Just like here, if you have a stink bid in for $80,000 Bitcoin, you're like, it was up here at 126 in October. By November, it was down at 80,000. 126, you're like, I think Bitcoin's, I took profits. I think it's going to go up. I think it's going to pull back though. You're looking at the different, like a longer term chart. Yeah, you see that here's like the support and resistance from the last time. So maybe even you just put it around 85,000. You put that bid in, price falls. But this one that's really nasty wick down. You put it your buy owner at $81,000. It gets filled and it pops back up and it doesn't go back to that level. And there's something fishy about this whole scenario where this thing sold off because this was like a Thursday, Thursday, and then like Friday. They announced that Vanguard was offering access to Bitcoin ETS, and JP Morgan was going to give their clients access to Bitcoin via their accounts. And then it popped back up and it's been going up. So it's like, I'm wondering why it was so quick to fall down, and they kind of released that information the day it hit the bottom and popped back up. But that's putting in stink bids, putting in lower bids, but there's also putting in sell orders. So we're looking at Bitcoin now. Maybe you think it has a projection that Bitcoin's going to go to 150,000 before the end of this bull cycle. Right now it's at 83,000. It's almost a 2x. It's like a 1.75x. So you go in there, you put you have your Bitcoin, you put it on exchange, you put a sell order. You're not going to take any price below $150,000. As soon as it hits that price, your sell order triggers, the money goes in your account, the other person gets the Bitcoin. But when it comes to really managing your portfolio, it's really hard to do that with a portfolio of 100 cryptos. But if you have like 10, 20, maybe, that's like Angela, to get, long story short, 10 to 20 cryptos for most people, some even 5. Like, man, I could have done a lot better even the last cycle if I would have just put all my money into Dogecoin and sold it when I bought it and sold it when I did. If I'd have put all my money in that, man, tens of millions of dollars, right? But so it just, like it's not necessarily better to have a bunch of cryptos. It's about having the right cryptos. And I know I was a degen, so I had 100 coins because I was trying to pick which one was going to be that right one. You know, you could get you have 10 of them. If only one of them does 100x and the other ones, some of them lose, some of them only 2, 3x, you still really make out with that one. So that's just something to consider. Again, having a really large portfolio can make it really hard to track. So just keep that in mind if you're actually trying to build your portfolio and look into different things. Where was that one? Yeah, so it's really hard to juggle them all at once. Let's see what other, let's go to the next one. Here. I'm gonna look at some of the questions from our crypto mastermind sessions just to extend this a little bit. And we did have Monero and PaxG. I did mention Pax Gold earlier in this one. It's one of the top tokenized gold forms, and it's really well backed. Some of our 400% increase in assets under custody to 6.8 billion in the last like a year or so. It's the only federally regulated gold-backed token under NYDFS oversight, New York Department of Financial Services. Chart suggests, it says it could move towards 47,000 plus. We're already at 5,100. So the chart was even lying when it comes to that or not. It was underestimating where it was going to go. The point of the tokenized gold, it enables 24/7 gold trading, better liquidity than physical gold. And I mentioned this in the tokenization discussion. A lot of the reasons for the tokenization movement for tokenized gold, uranium, all these things, is to increase liquidity in those markets and make them so they're 24/7. And the important thing to note here, gold typically front runs crypto bull runs by approximately 180 days. So we're seeing gold spike to new all-time highs right now. So there's a good chance that within the next 5 months or so, we're going to see Bitcoin really go on a rally. And then alts after that. I know alts really underperformed for the whole last, it's depressing, like a year and a half compared to even just Bitcoin. But we're like a lot of people are like it's gonna play the ultimate coin market is gonna play catch up with everything. So we'll see how that works out. Let's see any questions down here. There's XRP there in the water, and we'll struggle to reach over $10 on this timeline. Now I'll need to raise my vibration and move to another timeline. Thanks. It's been so well being here. Yeah, there's a whole lot of hype around XRP still. I think I mentioned this last time. Banker coin, all this stuff, but banks aren't necessarily going to put billions of dollars into XRP, the token, especially when they have RLUSD, XRP's stablecoin, just as a one-to-one for US dollars. So be careful. It's not going to go to $100 or like $500. It used to be like $560 or XRP. That's a pipe dream, especially when you look at the token supply versus the market cap. But yeah, not going to happen. But it doesn't mean it's not going to go to $10, which is what, like a 3x from here. And again, nothing to poo-poo over. And then Liz asks, what about XAUT, Tether Gold? Yes, Tether Gold is safe. As I mentioned, Tether has extensive treasury reserves now. They can cover all the Tethers in circulation, and Tether Gold as well. So that's something to keep in mind. And one more that I wanted to share. Our crypto map. Again, this was our real world asset video. I kind of covered that last time. That was a long one. Yeah. Again, this is the crypto masterminds we did, headed into last week's tokenization episode. So I would imagine that major credit reporting agencies are planning how they will account for tokenized assets. So I wonder just how long these will remain outside of their influence. These organizations exist, FICO, etc., and the benefit of financial companies' risk management, basically allowing them to tattle on everyone in a crude sense, but also limit same with what they can access. This sounds like a very dangerous mix of my thesis, if my thesis is correct. Yeah, there's a lot of chatter about the whole tokenization thing, what it means. You can be completely tracking, all that stuff is pretty much true. Like, if your assets are on a blockchain, if you're conducting transactions on a blockchain, it is completely transparent. There are privacy chains like Monero. What's that new one? Dark. Is it Dark? Gosh. Monero, Pax Gold, those types of what's a Mimblewimble? All these are they're private, but it's more just like you can just do transactions. They don't necessarily have smart contracts and decentralized applications on top of them. So you might be able to send and get money sometimes with those, but overall, everything you do is completely transparent. And they're kind of moving the whole thing is moving the world towards a more transparent, more efficient system. It does come with risks and cons, pros and cons, less transparency, less privacy, all those types of things. More ease of use is a pro. I've thought about this for years, and I've accepted the world we're headed in because I like technology. I like the digital economy. I like what technology allows us to do. And there's going to always be trade-offs with these advancements. They're going to come with different things. And so I accept that. What's the smartest exit strategy once these RWA targets hit their predicted prices? Go full BTC maxi, rotate into stablecoins, or diversify into metals and land real estate? If holding a mix of these three makes sense, what allocation percentage would you recommend or for risk management? Finally, could embracing BTC maximalism actually shield investors from technocratic overreach in a tokenized world? So the smartest play really comes down to what you're looking for. It's probably better to take some of this digital stuff. You do make all this digital wealth and bring it into the real world, like you mentioned with real estate, land, stuff like that, into metals, precious metals. Again, silver and gold, they've gone pretty hot lately. Is it possible that their prices are going to pull back? Yes. Are they going to pull back to zero? No. Are they going to survive long term to offer value and store their value? Yes. So that's always an option. If you want to stay in crypto, stablecoins and Bitcoin is probably the best play. The only questionable thing with stablecoins is they are pegged to the US dollar. So if anything happens to the US dollar, it will also happen to stablecoins. That said, and that's easily why you could get like some of those predictions of $1 million Bitcoin or like $200 XRP price. If the value of the USD tanks, there's going to be, especially because of all the USDT in the crypto ecosystem, there's going to be people rushing to sell that for whatever asset they can get. They'll probably start with the ones that they want, like a Bitcoin, Ethereum, Chainlink, Solana, these higher crash ones. But you don't see some of these crap coins down at the bottom just start pumping, they're going to pump the crap out of them to get people FOMO'd into them, push the price up so they can extract even more value out of that. And they'll probably convert it into Bitcoin, especially if they're trying to stay away from the stable coins. So yeah, like the holding a mix of those different is really comes down to each individual person. If you're older, you probably want more conservative. You don't want to have a lot of your money in the volatile place. You want to hold it in stable coins and Bitcoin or gold. If you're younger or you are more risk tolerant, you want to put it in the altcoins. You want to put it into, well, even holding Bitcoin and Ethereum as well. If we're talking market top here, it's interesting to see how this is going to play out, especially the market top and what comes after that. Just because we're seeing the death of the whole 4-year narrative, the Bitcoin mining driving the whole price flow. And some people say that was never about the Bitcoin mining. It was always about like monetary money flow and different developments in the world. Every time there was a Bitcoin rally, there was also something major happening in the world. So there was no instance when the Bitcoin really rallied when there wasn't a major geopolitical or other type of event. So we can't say that for sure that it was just the Bitcoin halving. All those other things played a role. Like in 2021, it was COVID. Everybody staying at home, getting stimulus from the government and putting them into cryptos because it's like, let's make this stimulus that I got for free triple or quadruple, right? So yeah, it really comes down to a personal decision. If you need a fast financial advisor, contact one and kind of work out the scenarios with them just to kind of see what works best for you. Could BTC maximalism actually shield investors from a technocratic overreach in the tokenized world? You just have to be careful because Bitcoin is transparent. Everything you do on it is seen. It's public. It's not hidden. So like the technocracy can kind of see what you're doing. And if they know it's your wallet, they can react through that. So what's the best way to protect yourself in a technocratic world? Protect yourself from overreach? Go live in the forest without digital equipment. You can use privacy coins. But so the whole point is transparency and efficiency. So we're all kind of headed towards a world where we're not going to be able to hide so much from what we're doing. And you're probably going to see this online. You're not even going to be able to have anonymous accounts. You're going to have to kind of connect your personal blockchain or your private key to any kind of service, even if it's X or something, so they know who it is. So you can't just be posting stuff anonymously and getting away with saying things that are against the norm. Christine will look into a BTC section on Crypto Mastermind in the future. It's been a while. World Libya. So could you look at World Libya Financial? That's Trump's family's corporation token. And I am considering actually, it's what I'm looking into allocating towards personally myself. I have not yet, but I'm something that I'm looking into just because it has name recognition. They're actually investing in legit tokens. So just the value of their portfolio is going to increase and will increase the value of the company long term, in my opinion. I'd like to hear your opinions on how many tokens is optimal amount to. We have another one. As the run-up happens, how many different coins should we cap ourselves at so we still optimally juggle and it's Angela again. So I mentioned that, or I answered that before you, Angela, before. I'd say try for really new people, 5 tokens. For the more you get into it, 10 to 20. I really wouldn't go past that just because it gets really hard to manage, finding what exchanges they go to, having them in a wallet that can be connected to our crypto decentralized exchanges and exchange. You have to account for trading fees. Sometimes they're really high, especially. So right now they're low because people don't really want to transact because like the gas fees on Ethereum are low because the prices are low. But when they really start to run, gas fees shoot up. You can pay like $100 for one transaction on Ethereum, especially if you're on Uniswap or these other ones, trying to get to account for MEV, minor extracted value, or minimal extracted value now, where somebody can front run your order, all these different things to take into account. So it's going to be more challenging, especially when you have a longer list of tokens. So just try and keep it short. Focus on high conviction plays, and stick to your guns. Get your price orders in there and put them on exchanges. Set it and forget it. If you don't want to use exchanges, use a broker. We have a couple of partnerships, Uptrade in Australia, as well as Courtney Brown. They're reliable, trustworthy. You put your funds on there, call them and say, put my sell order here. As soon as you don't even have to just go to sleep, forget about it. One day you'll get a message from them, a call or an email. Hey, your order is filled. Here's your money. Where do you want us to send it? Do you want us to transfer it to your bank account now? It makes it really simple. They are a little bit higher fees compared to exchanges, maybe 2 to 5%, but it kind of takes out, like Uptrade, they have access to all the exchanges in the ecosystem. So the problem is you go on one exchange and you have, especially if you have a large position, you're going to go and try and sell it. There's not going to be a lot of buy orders for the price you want. So you're going to have to sell it down the order book until you're able to fulfill your whole position, which will decrease the price. At Uptrade, they have access to all the exchanges and can at the same simultaneously kind of try and sell across them. So the price remains stable and you get most value, the most value you can for your assets. So those are just something to think about as far as what you want to use, how you want to cash out when this bull run really comes to an end, and where you want to put them. Again, gold, real estate. I'm personally probably the debate. Do you pay off your house or not? Say, especially if you owe like $400,000 in your house, paying it off is like taking $400,000 that you have and just giving it away without earning money. Like even if I had $400,000 worth of USDC, which is a stable coin on Coinbase, it'll earn 4%. 4% of $100,000 is about $4,000. So $400,000 is $16,000 a year. Just letting that money sit on exchange. So I could be earning the $16,000 or I could pay off my house. Whether it's like the mental aspect of it, having it paid off is nice. But having that other passive income source, like especially for me, say my house loan mortgage has a 2.75% APR because I got it in the good times of COVID. Now they're up to like 7% or something. If I can earn more on my holdings than the amount that I'm being charged for my mortgage, so I'm 2.75%, but I can earn 4%, it's a better deal to invest this at 4% and take the proceeds to pay off the mortgage as time progresses. So these are the types of things you think about when you're really getting into like, when do I sell and what's the best place to put it? Again, real estate's always, not always solid, but it's a solid investment, especially if you like where you're at. The place is a up and coming area and whatnot. Gold, lots of other, we're going to be covering other topics and other assets here in the bull and bunker in the future, whether that's stocks related to AI. So even if crypto peaks, not every asset is going to go down at the same time necessarily. That happens every once in a while when there's like an economic crash. But if that happens, like there's no safe place to put your money. But we're one of our goals here at Bull and Bunker is to try to like find the assets to hop into. So when one peaks, you hop out of that one and you put it into one that's still down. And as it rises up, you wait for that rise and then you sell out at the peak again. So that's the ultimate goal here. But no more questions. So we're kind of getting ready to wrap it up. We explored the pristine collateral strategy, why Bitcoin, ETH, and gold are the new financial backbone of the upcoming economic system. And we covered some accumulation tactics for boring phases and indirect plays like MSTR, Pax Gold, and Mara, Marathon Digital. In 2026, this approach isn't just smart. It's essential for navigating the shift to on-chain finance, which is only speeding up now. Again, we have the DTCC going to be able to tokenize assets. The last one I covered, we talked about the NYSE saying that they're going to launch their own in-house tokenized platform. So this trend isn't going away. It's only going to pick up. Eventually, everything from your medical records and school records to your house deed is going to be on-chain. You're going to pull out your phone and have a digital wallet and be able to take a loan out against the token that represents your house. Because in the smart contract will be baked in how much the house is worth and all the data about it. So you'll be able to upload that somewhere, or not even upload it. You'll be holding your wallet, connect with the bank. You say, this is my wallet. They'll look at it and be like, that token's worth this. Do you want to lock it in a smart contract and take out a loan against it? So yeah, tokenization it's going to open a whole new world of liquidity and danger. And the scammers are going to be coming after your money just like they already are. So there's always going to be something to care about or to be aware of. But this trend isn't slowing down. So the best thing you could do now is position for it, whether it's buying the assets that will fund or fuel this transition, or buying these assets like Bitcoin, Ethereum, and gold that can preserve your wealth until this emergence comes along. That's kind of what we covered here and what you're looking out for. So on the next, our next episode will come up on Friday, and you can join the future forecasting group at the founders level to get access to our crypto mastermind sessions and all the other remote viewing sessions and any other data that we put out there. Help really inform you. Like legit, Future Forecasting Group is a civilian intelligence agency. Nobody else out there is doing what we do, especially taking things like remote viewing, 9 remote viewing sessions a month. giving you forward-looking information on lots of different tasks, and every once in a while, just a little bit of entertainment on woo-woo type subjects. So with that, thanks for watching. Stay stacked, stay pristine, and bunker on.